Welcome to another edition of the Family Office Real Estate Institute interviews, where we talk with specialists, family members, and family offices about, well, things that they've been successful with, as well as things that they've had challenges with as well. Today we have Justin Bakewell, who is with Keuren Family Office. Justin, thanks for being on the show.
DJ, it's a pleasure to be here. Thanks for having me.
So you are with the Pitcairn Family Office. I've been fortunate enough to know Andrew Pitcairn over the years. He's been a guest on here. He's actually a board member of the Institute. And so when I saw you an email one day, I was happy to see. It's obviously related with a great company. We were talking the other day a little bit about you coming over to Pitcairn, but first, can you give me a little background on yourself and where you were before here?
Yeah, absolutely. So I was at a firm named Brightside Partners, which my partners and I founded in 2019, and it was a kind of a holistic approach to serving ultra high net worth families, but with a twist on it, not only providing or doing our best to provide all the services that these types of clients want, but we also specialize in a fiduciary approach to investing in private markets and all the operations and administration around investing in portfolios like that.
So, and how long did you have that business? Or how long been in the financial services industry, I guess you could say?
Great question. So I came into the financial services industry around 2008 after I spent almost a decade in the Marine Corps. So it was a little bit of a pivot, but I've loved it ever since. It's been wonderful.
So what area did you start with? Did you start with a brokerage firm? Did you start just in regular financial advisory? Whereabouts? Because I'm curious on your progression.
Sure.
Today.
Sure. So I started off as an associate at JP Morgan Asset Management in New York on the institutional side, and quickly pivoted as New York wasn't my landing spot, not where I wanted to be the long term. And I found a firm named Bernstein Global Wealth Management in Washington, D.C. So that's really where I cut my teeth as an advisor, kind of serving clients in the D.C. region, providing all the kind of traditional fiduciary advice and planning that you would expect. And from there, I had a couple other stops, one at Brown Advisory, another RIA, and JP Morgan's private bank, all a little bit different taste and twist on how to serve wealthy families. And that's what led me to kind of help form Brightside Partners in 2019.
So how is Brightside Partners different than some of the other firms or institutionalized firms, should we say?
Well, so Brightside was founded to address what I would call a gray area. And when you work with some of the larger institutions, what you find is that a lot of the private market investments are coming off the shelf. They're large private equity firms. These large firms that you're serving take large mandates within these firms, and this kind of requires you then to be part of a multi-billion-dollar private equity or private credit fund. And what we were seeing in the ultra high net worth community was this desire to access kind of lower middle market managers with smaller fund sizes. And that was really one of the catalysts to starting Brightside, was providing that opportunity to clients, and then building portfolios in a fiduciary way. So rather than being compensated solely on the fees associated with whatever fund a client would go into, we thought it would be advantageous for clients to build investment policy statements. They're really focused on cash flow needs, liquidity, as well as return, and build portfolios specifically around client needs, as opposed to based on potentially the return expectations of Fund A or Fund B. It was marrying that along with the kind of the family office administration that we found to be unique in the marketplace. And it was pretty well received. Not one of the easiest things to do, though. Maybe that's why not so many folks are doing it out in the marketplace.
So, you brought up investment policy statements, and unfortunately, a lot of families don't have that, in place, um, which is great with what you guys were doing. But also, what I've found over the years is that it seems that once a family hits about 100 million, they start moving away from the JP Morgan Chases and the UBSs because of the fees and because of the lack of, variety, I guess you could say that's available, right? So what was some of the family office aspects that you started putting in place, which obviously there's some growing pains there, but that's how, you create something great.
You bring up a really good point, DJ, and a lot of these larger institutions are actually hamstrung as banks uh, around some really necessary services and unique reporting and planning. So when you start working with a family that is north of $100 million, yes, the investing piece is critically important, and having investment policy statements that clearly outline what your legal and ethical obligation is. What we found is it's much more, if not critical, for us to be in depth with the family from a planning standpoint. And when I think about planning, that's everything from traditional financial planning, where we're looking at individual households and how their cash flows, how their philanthropy works, thinking through tax compliance and tax strategy, estate planning. And one of the things that is jumping up more and more is kind of this idea of family engagement and family governance. So bringing all these things under one roof is a unique, I think, value to a client. Um, and that's what we're doing at Brightside to a certain extent, and what we continue to do today.
When I talk about family offices and the space, I usually explain it that there's a soft side and there's a hard side of the business. And the soft side are the things that you talked about, whether it was estate planning or governance or, making sure that there's actually a game plan for the families for future generations. And then the hard side, I say, is the investment side. And you have a lot of people, unfortunately, especially over the last couple of years, that say, "Hey, I'm a family office," but the reality is that you're really just an RIA, which is fine,
Right.
but the complexities that you can get into from a planning perspective can be pretty significant, right?
Absolutely. And to your point, some of these soft areas, whether it's governance, decision making, cash flows, when you're at the scale of $100 million, these little areas can make a meaningful impact on your overall wealth, especially compounding over time. Um, you also brought up an interesting point around the moniker of family office, and it is very widely used now. And from our perspective, what we want to make sure that we're bringing to clients are truly those family office services, not just the marketing aspects of it. So to make sure you have the expertise in house to deliver those services is critical. And the competition for those types of strategists and experts is only becoming um, higher and more complex to find the right people for the right fit in these firms.
Yeah, and actually to do it right, right? In order to do it really what needs to be done. And there's a small universe, it's growing, but there's still a small universe, I think, as a whole. And so you decided after a number of years, what made you look at Pitcairn? And Pitcairn, as I mentioned, I know Andrew for a period of time, and if you haven't heard the family stories, they're pretty awesome.
I was just sitting down with him. We were just talking before I came in here, and he's always got a good one. And oh, sorry, go ahead.
No, I was going to say I actually interviewed him at a conference, at one of the conferences, and we went all the way back. And with how many family members there were, like 600 plus, and then they split in half, and the whole thing. But so when you started, what made you start to look outside where you were working at the time?
Well, so my partners and I were at a point where the clients that were coming to us were enamored with what we were doing on the private investment side, and we were really able to execute that and execute it well. what we were challenged with was really building out that robust set of soft services that you kind of described. And we had kind of a decision point where you need to raise capital and invest in these types of folks, right? And the ways to do that, you can have private equity, you could have a family office invest, um, or you can partner with somebody who has kind of the longevity and the history and the expertise that you needed to deliver to clients. So, we came to the conclusion that the best way to service our current client base was to find a group that has been doing this for a very long time. So, one of my partners is very familiar and knows the Pitcairn ownership team, and we started a conversation with them around 2024 and just got to know the leadership team, got a really deep understanding of the history and the experience that they have that cannot be overstated, right? Just because you have the people in house doesn't mean you have the institutional knowledge of what families have gone through for over a century. So we got to know them. We spent almost a year talking to them. Culturally, it was critical for us to be on the same page, and it's just been a great fit so far.
You know, my understanding going way back with Andrew is that they primarily focused on the soft side and not as much on the investment side, right? Which I think is probably the best way to go because that's the harder component to really understand. But also having family members dealing with it themselves, I mean, that's also something that's irreplaceable because they're like, "Hey, this is what my family did," or you can understand and much more, and which is one of the reasons why they've continued to grow.
Absolutely, and you make a great point. I say it this way: if you have an investment policy statement that outlines certain risk, return, and asset classes, the best of the best, which is I would say Pitcairn is one of them. The dispersion of outcomes within there are going to still be pretty tight, right? And you're going to get a great returns and great outcome. But if you don't have trust built in through experience around some of these um, generational shifts around how to think through governance structures of family foundations or operating companies, transition plans, whether the right generation, whether the right son or daughter is in the right seat and be able to explore that, the investment policy statement isn't going to make families any stronger or happier. So, the fact that they had that experience is very important.
One of the things that Andrew said to me that I use actually all the time because I think it's brilliant is, um, family office isn't the family business; it's the business of the family. And I thought it just really resonated with me because, you have a lot of people, especially today, that are out raising money and I'm a family office. Well, no, you're not. You're a business, which is fine. There's nothing wrong with that. But, there's a lot more to it if it really is the family and a lot of things to deal with. One of the things that we do at the Institute and how it all came about was providing education, right? And so it simply started with a one-page landing page, probably about 8, 9 years ago for the Institute, to the point where, we have executive education classes and we have a annual conference. And one of the things that we do, and we make a point of it, is about 20% of what we deal with or we discuss are the soft issues, is the governance, right? It is the family councils. And then the rest is real estate. And it's been amazing because, there's been a number of families very well to do that had no idea about governance, no idea what they didn't know, I guess you could say, and actually we were able to take those steps in order to do that. And that's just shows, how education can be powerful. So I I understand that at Pitcairn you guys have a big belief in education. Is that and training? Is that true?
Yes, it's one of the three pillars of what we focus on. You have the traditional investments and family office services, but we spend a great amount of time on what we call family engagement. And and it's everything from helping different generations at the youngest level have basic financial literacy all the way up through how are you thinking about governance across a variety of entities within this family enterprise. And to your point, the family enterprise often consists of a family business, a family foundation, family councils. All of these different areas need to be kind of symbiotic. They have to have plans, they have to have succession, and they have to have uh, what I would describe as effective communication across the generations, not to mention exploring values and having different ways of restructuring and being flexible. And, you know, these are some of the nuanced areas that I'm hearing families struggle with all the time. And one of the reasons is because it takes a lot of work from the family. It takes a lot of work for whoever is advising the family, and the ROI isn't always black and white in dollars and cents. Sometimes it's just in happiness around the Thanksgiving table or wherever you celebrate.
You know, one of the things I've been saying for years um, is I'll meet some very, very successful families that created their wealth in a business that they sold, and they had a big windfall of monies. And caught myself many times saying, okay, they created this amazing business, but it's like they forgot everything once they received that capital because it's like, did you used to have quarterly meetings? Did you used to have goals? Did you used to have a plan? And a if something were to happen, the transition to the next person to keep the business going, these are all hire the best people, right? These are all of the things that I'm like, now you need to do it for your family, but they don't necessarily look at that way. I'm like, well, that's how you became so successful.
It's funny. I love that you bring up that analogy. I was at a conference this past week where we're talking about conflict and how to minimize conflict. And one of the notes that I mentioned, because there's so many people that are running family businesses, I tried to paint the picture exactly like you just did. Would you hire that person into that role? You know, what would you do if that person wasn't able to execute their as the head of sales, right? Who steps into that? And while most of the business owners understood that, you know, the wild card there is just the family relationships and the history and the dynamics. And that's one of the areas where you just have to navigate around because you don't have an HR team for your family, right? You just don't. You're not generally drawing up performance improvement plans for your family. But what I've recommended, and I think what our team generally talks about, is you need to identify the leaders in the family. You need to identify leaders that understand the concept of influence and how to influence the family enterprise in the right direction. And you have to apply a lot of those same strategies and techniques of building relationships and building trust within the family that you do in a business, but it's wildly more important with the family.
And
Uh,
it's more difficult, right?
it's very difficult.
I mean, I tell people, I'm like, look, we all have issues with either a brother, a sister, an aunt, uncle, your parents, right? Something arguments, and well, start adding a bunch of zeros next to that. And then what do you think happens to those, you know, uh,
Yes.
activities that does cause a problem, right? And
Yeah.
it's also, there's also the aspect where a lot of patriarchs or matriarchs, they don't want to give up control.
Yeah.
And that's I would imagine on your side, you've ran across that a couple times, and that's been a little challenging.
That's absolutely one of the biggest challenges is control. And there's no easy answer to how you manage giving up control. But what we found is having a staggered approach or some sort of plan and helping the matriarch or patriarch backing up before we talk about giving up control, right? Like, let's not start there. That's not a good place to. That doesn't feel great. Thinking about legacy, thinking about how do we pass on the values of the matriarch and patriarch who created something really special, and how do we communicate those in an effective way? Those have to be the first couple steps before you start having conversations around control. Um, and then when you're doing that, if you're building a vision statement, if you're thinking about your operating agreement, those values can bleed through to an actual structural agreement, which then can lead to a passing of control and potentially passing of equity, and helping them understand, you know, in the current state, how is this going to unfold if we don't make decisions, I think is an also important piece of the puzzle.
Well, yeah, getting them to the table is the first challenge, right? Just to get them to realize, okay, let's have this conversation. And that definitely, you know, that I've seen that cause challenges many times.
It's one of those it's like when you're adult parents or your grandparents, you're thinking about having them, move to a facility or something that's helpful to them, right? And this just happened recently in my own life, where you don't want to be put in a position where you're forced to make a decision. And bringing that to life in a way where somebody has agency on the change of control, on where they're going to be, I think is an important approach. And what we're finding is, the second generation in their 60s, maybe sometimes in the 70s, are starting to push this more and more. And it's never easy, but it's necessary. So the sooner you start creating, I would say, back to your point of folks that are exiting a company, when you're establishing a family enterprise, some of these educational kind of focus areas are critical, because the longer you go down the road, the harder it is to kind of change path. And then you're just left with a change in control that might not be what the creators wanted.
Or maintaining the same values, right? And maintaining, what the family stands for, or, how they want to be perceived, or what's important to them, especially with the younger gens today. I tell people, I'm like, if you had a real estate deal and a patriarch could get 18% and then save the world, and you go to a younger gen and you said they could save the world but get a 13%, they'll go with the 13%, right? And there's definitely different, different thoughts about how to go about things. And so putting everything in place is so, so important, especially for those that want to continue on, a family legacy in a certain manner.
One of the things that I saw recently is a family enterprise that at the age of 18, family members had voting rights and interest in the family enterprise. We'll leave to the side what that is. But at that point, each family member that was kind of matriculating into this leadership position was given effectively an onboarding packet by the family office. And think of it like an HR packet, except it was focused on the creation of the wealth, the family tree, who's making decisions, what were the backgrounds of these people making the decisions, and how did they get into these areas. I thought it was just an amazing way to develop a common identification with the family before just opening the books and saying, hey, this is the cash flows of the company, and now you got to make a decision around it. It was a very thoughtful approach to sharing those values, to your point, and making sure that those were the foundation to be part of this decision-making group, as opposed to, a financial understanding. That all came later, but, both critically important. Can't have one without the other.
With our monthly or our quarterly magazine, with the Four magazine, we've done a number of cover stories on families, and the way the cover story works, I'm like, let's go all the way back to the very beginning, and let's walk through this. And what ends up happening is there's 9-10 pages of the family history and what they went through. And it's been pretty neat because, there has been some of the patriarchs that had mentioned, hey, we shared this with the rest of the family members because it is important, just like you said. I mean, that's really the foundation, right? Now, here's a something that I've realized when I say I fell into the family office space, that's exactly what happened. I wasn't planning to go into this space. I just happened to fall into it. And to me, it seems as if 95% of the people that work for a family fall into it. And the reason is because it's not a matter of, okay, I just sold my business. I've got $200-300 million. Let's find the very best person. It's who do I trust? Well, the issue you have is just like them, they spent maybe 40 years in chemicals or tires. They know everything there is about that. They don't understand hedge funds and real estate and private equity, right? Venture capital. Well, it's the same thing for that person that they trust that came in too as well. So how do you, and I'm sure you had to have dealt with sort of outside family members that are part of some of these conversations. Has that happened?
Sure. So if I understand what you're saying, I mean, like, how do we navigate those trusted advisors that have been working with families for decades? And how do we kind of make sure that the family is well supported while honoring the service and the advice that they've had?
Yeah, and a lot of them and a bunch of them are even, full time where that's what they do, but they don't know what they don't know, right? Just like a new family.
Absolutely. So, well, we approach it two different ways, and you can direct me which way you want to go. Our job is never to supplant trusted advisors that helped families, grow an amazing amount of wealth. And we do work with a number of single family offices that have these trusted advisors. And, our goal is to help them translate to the family what is in their best interest. So again, it goes back to the education aspect of it. If we're working with a family member or a trusted advisor, what we want to do is make sure that they're equipped with the education necessary to help families make a decision. Now, there's the other side of that where certain family offices, and we've run into this more often than not, family offices run their course. And the individuals that are running family offices decide that, I don't know, I'm going to be doing this for another 10 years, and there's just no one else in the family to do it that wants to do it. We take a different approach there, but ultimately, what we try to do is honor what was created by the family, not supplant it. And we've actually taken on and absorbed single family offices that have run their course, and we found that to be important for a couple of reasons. The first is every single family office has institutional knowledge, regardless if you're an expert or not. You know families, you know how they communicate, you know what's important to them, and we don't want to lose that if we're working with a family. Um, and then the second reason is not the emotional side, but just the structural piece of it. They know where everything is. You can't lose the hard knowledge that they have either. So, we do that quite a bit where we partner with them and then they're able to gracefully either be part of the Pitcairn team as a shared single family office or, go on to do whatever they want to do in the next stage.
So if I was a CIO or a CFO of a single family office, I'm not the family, but I'm, a hired gun and that's all I'm doing. Would it be beneficial to even have discussions like with the Pitcairn family office and trying to understand what really needs to be done?
I think so. I mean, I don't see how. I mean, the family office ecosystem is all about sharing best practices, right? And we're not out there to say unless you fit in this bucket, we're not going to talk to you. What we want to do is help families. If they have a CIO and they're all buttoned up there, but they want to learn more about the structure of governance and different entities and how do we educate our families and put together curriculums, we're happy to help you. We're happy to point you in the right direction. We're certainly not there to try to convince the family that they don't need a CIO that they trust. That would be the farthest thing from anything we would ever do. And even if it's just a conversation, we welcome all those kind of talks.
And I think that's actually important. I hadn't really thought about that too much, but you know, with that trust comes making sure that things are put in place. And that would actually be, I would think, a great thing to do to be able to say, okay, this is what I found out. This is what's going on. They go back to their patriarch, matriarch and say, hey, we need to sit down with these guys because there's things that, we haven't addressed or haven't thought about, and a lot of times people think, okay, that patriarch needs to walk through the door, but not necessarily. As long as you've got somebody that's, there and part of the team to make it happen.
Absolutely. And if we can make that CIO look great based on asset location across a wealth structure, as opposed to, giving him or her advice on asset allocation, that's exactly what we do. And, there are plenty of occasions where we work directly with those advisors as opposed to the matriarch or patriarch. Um, and that oftentimes is in the best interest of the family, and disrupting that. Look, this as well as I do. If you don't have trust in your advisor, nothing else matters, right? And the advice that you give, staying the course in turbulent times, executing on things that can make your family stronger. There's never a point, in our opinion, where trusted advisors that have been around the family for a long time, that are doing a great job, should not be in those positions, because it's ultimately in the family's best interest.
Well, to me, another reason why we'll have a certain percentage on the soft component of families is because I've been fortunate with the families that I've worked directly for. I get it. I understand there's a need for governance and there's a need for, family councils and getting things organized. And so I've been able to, talk with a family. Maybe we're working on some real estate transaction or part of the consortium. And I'm like, you really need to look into this governance, right? And so coming from a third party saying you need to talk to somebody about this. I've got a couple people, let me put them in touch. One, that does make the advisor more valuable, but I also think that they're making them a better advisor because they're understanding the holistic component, which is where you ended up going and why you are where you are now.
You hit the nail on the head. You partner with somebody who's thinking about the whole family enterprise,
Mhm.
because it's like a balloon. If you make a decision over here and push it in, it's going to pop out over here. And how are all these pieces intertwined and working? And you have some amazing advisors out there that are, some great trust and estate attorneys and CPAs that are laser focused on structure and or transferring the max amount of assets in any given situation, but without understanding really what you're trying to achieve, the full wealth picture, potential liquidity events,
A quarterback.
a quarterback, if you will. Um, you can't possibly be making a fully informed decision without weighing all those different options. It's like being the CEO of a company. You can't just make an investment over here and hire somebody. Those resources might be better spent over here. It's not a business, but a lot of these same principles apply.
Mhm.
And to your point, having oversight is nothing but helpful.
Well, I'll tell you, I think that, anybody that listens to this or sees this, there is tremendous value in multifamily offices from the mere fact that there's different experiences that can be discussed or issues that have happened in the past that they might not run into because the multifamily office had dealt with it with one or a number of families. But I also think it's important that if you do think about a multifamily office, you have to ask yourself, outside of the investments, what am I getting as well? And that's the soft components, and that's the things in my mind is even more important than the money, because you can create 10 times the amount of money, but if you can't keep it and if you can't pass it on to generations and that's what you wanna do, it doesn't matter how big it is.
That's right. And I would add a third leg to how you think about the importance of partnering with anybody. You have the hard skills as it relates to investing, You have the soft skills, as we talked about, structure, governance, education. I think the third piece of advice that I'd give anybody that's listening to this is the ownership structure of whoever you decide to partner with and how that might impact decision making, incentive structures, and the advice kind of delivered. And that's an important element as well.
Well, I'll tell you, I'm glad that we were able to talk about this because, as I said, I mean, we have a 20, 30% of the various events that we talk about the soft side. And I think it's extremely, extremely important, not only for the families, but also the people that work with the families, because, you're doing a disservice if you don't understand some of the areas that you should have an idea for. And, congratulations, I want to say to you, because as I mentioned, I've known Andrew for quite some time, a couple other family members, and they're just the top of the top. So you happen to land in a great, great place.
I sure did. Thank you so much. I really appreciate the opportunity to chat with you, DJ.
Thanks, Justin. And we'll have you on again in the future.